All right, y'all. Welcome back. Let's jump right on into it. Y'all see the title full, so we're not gonna waste no time at all. The importance of checking various time frames. This is very important, guys. Take note of this, internalize this, and make it a habit. So when you're in the market, you never want to get too locked into just only looking at one time frame. So for example, for me, most of the time now I only trade off of the 1 minute time frame because most of the time I'm looking for price to be moving in a steep direction going upwards because that should be some strong momentum pushing upwards, or I'm looking for price to move at a steep sloping trend going downward. And I like to play it off of the 1 minute chart. I'm usually taking, as I tell you guys, 2 minute plays to 2 minute and 30-second plays to 3 minute plays. Rarely do I take a minute play or 40-second play. That's rare. You know, I'm at the more advanced stages, but that's rare because I like to give time. I like to give price time to simmer in. But even with all of that said, you still need to be checking multiple time frames. When I used to trade mainly consolidation, which is sideways movement, as you guys know, I used to only trade off of the 5 minute and the 3 minute. I used to look mainly at the 3 minute chart, but I would look at the 3 and the 5 minute. But I'm here to tell you guys that whatever time frame that you get comfortable with trading off of, you still need to always be scanning the time frames around that time frames to tell you more about price. So like for me, if I'm trading off of the 1 minute, typically for me, you might find it different for yourself. So you're gonna have to find yourself through this. I don't want you guys to be so rigid to just always say, hold up, Anya said do it that way, so that's the only way that it could be done for me forever. No, I'm just giving you guys a foundation. I'm just laying you guys a foundation like a foundation is laid for a house. Ultimately, you're going to build that house how you need to build that house. Go off of the foundation and build it in a way that works for you down the line. When you get to the junior levels and the senior levels and the master and advanced levels of trading, you're gonna figure out, what works best for you. So I trade off of the 1 minute, but okay, as we see, price is moving upwards. But you know what? I want to know, let me look at the 3 minute because I want to see where is the EMA according to price. But I also want to know, generally speaking, what's the general strong movement? Is it because it looks like the general strong movement is some bullish movement, but does the 5 minute reflect, does the 3 minute reflect that as well? Well, let's see. So we move to the 3 minute. Understand that these represent 3 minute candles, 3 minute candles, 3 minute candles. So we see that, generally speaking, we're still in the uptrend, but the last 3 minutes of price is pushing downward. So, that's going to help me. That's another variable that's going to help me to determine what price has a probability of doing. And I'm starting to see a wick. So that's telling me something. But I like that, the EMA is far away from price. I like that. I see these long candles moving upwards in a bullish movement. That's telling me more and more about price, what price was doing, and it's giving me an analysis on, a probability of what price can do. So I'm seeing strong downward movement. So you know what? I may need to be a little careful. Maybe it's not time for me to jump in on this trade just yet. Because because it's moving in upwards movement, I'm gonna be taking calls. I want to wait for the right time for it to be taking calls. Now we're on the 5 minute chart. I still see that we're far away from the EMA, so I'm not worried about that pulling price. But I am worried that in this 5 minute candle, I saw this long wick. That's telling me price has been pushing down. I see another bearish candle pushing downwards. But I am paying attention to the small wick that maybe it might start to reverse. But with this big body right here, I'm still seeing downward movement. So it started to pull up. It's starting to wick. So maybe that's letting me know that, hey, price is about to start pushing in the direction I wanted to push in. We go back to the 3. We see a long wick. I like that. I like what I see on the 3. Let's go back to the 1. What is the 1 telling us? We getting a green candle. So I like what I see. Obviously, price hit a pivot point right here and it's starting to push back up. Is it time to jump in? Maybe so, maybe not. It's starting to cross that 8 EMA. I do like that. I would like to see my stochastic to start to point upwards, but don't always wait on your stochastic. Understand that the stochastic moves slow. So I want you guys to focus more so on market structure and price action. Okay, we're getting some strong movement there. I like that action there. Okay, now I want to jump down to the 30-minute, and you gotta learn to be kind of quick with this, because you don't want to miss great setups. But I don't want you guys to be so anxietal to be like, and get too overwhelmed. Take it slow, pace yourself. Over time, this will become a natural flow where you'll just jump in between the time frames, so that it can tell you more and more about price, and it can ultimately give you everything you want to see, and it can make you comfortable with your decision. So look at the 30-second. Now, this is breaking price down to smaller molecules faster than the 1 minute can show us. And what is it showing us? That, hey, price is moving up. Price is moving up. And it has passed that 8 EMA. I like that, but I got to be mindful of this wick right here. And we're far away from the EMA. So I like that. I like that. So now we're going to move down to the 15-second. What was the 15 second? We're going to break price down even more. Okay, we got to be careful, because the 15-second is not too far away from the EMA, but we still see a strong push away from the EMA, and it crossed that 8 EMA. So we like that movement. I probably would have jumped in right when it crossed that 8 EMA on the minute time frame. But we also see that, hold up, there's a little bit of indecision on price, a little bit of and look what it's telling us. It's telling us to be careful. It's telling us to be careful. But had I jumped in right when it crossed the 8 EMA, I would have gotten it clear by now, and I would have been safe. I jumped down to the 10-second. What is the 10-second telling us? Hey, the EMA is kind of close on the 10 seconds. So I need to be kind of mindful of such. I need to be mindful that price could be getting pulled back down. But like I said, had I jumped in at the, at that 8 EMA cross, I'm not saying that every time price crosses the 8 EMA that it's a guarantee that you're going to get the clear. But for me, that's one of my indications that I definitely look for, strong momentum push, but I am mindful that, hey, am I trading consolidation, or am I trading the trend? Because, my principles are different. If I'm trading consolidation, I want to jump in at the lowest point. If I'm trading the trend, I want to jump in on, let me show you. If I'm trading the trend, I want to jump in on possibly a pullback, or possibly what we consider to be a pivot point, which we discuss in other videos. So in this trade, as we see right here, had I jumped in, let's say, for example, at the EMA cross, when this candle started to engulf, that would have been about a half a minute on this candle. That would have been a whole minute on this candle. It would have hit that pivot. It would have hit this area of resistance, and it would have started coming back for me. So more than likely, I would have cleared. It would have been a close clear, but I would have cleared. This was a massive candle, so this was definitely coming for me. This was coming for me. Is this a setup that I preferably would have taken? It's not what I would love to see in the market, but I'm just trying to give you guys an example of the importance of switching through the different time frames. We'll do one more pair. Look at this pair right here. So let's kind of focus on when this pair was in this area right here. So we saw it moving into some strong uptrend movement, but we have to say, hold on, why did it start consolidating, and why did it start pulling down like that? Was it this EMA? Is it this EMA that it's put into? We can say that. We can definitely say that, because it wasn't too far away from price. But was there any other EMAs closer? Obviously, we see that we can mark that it hit a level of resistance right there. And that's a part of why it started to push downward. There could have been a possibility within a shift within currency strength that helped prices start moving down. Remember, we're always plugging together these many different variables. These are just puzzle pieces that we're plugging together to see why price is doing what it's doing. So where's the EMA according to price on the 3-minute? Okay, it was a nice distance away, but it was a decent distance away. But price seems like it's pulling towards that EMA. When you have the EMA close enough on various time frames, that's a strong EMA, and that could be a strong pull to pull towards that EMA. So you want to be very mindful of such. The same thing, vice versa. If the EMA is far away from price on 3 to 4 to 5 different time frames that I may look at, I'm comfortable with price being far away from the EMA and price being able to do what it's supposed to do from a probability standpoint. But if I know, hey, hold up, on the 3, it's kind of it's at a decent range, but it's close enough. On the 1, it's at a decent range, but it's close enough. On the 5, it's at a decent range, but it's close enough. On the 30, it's at a decent range, but it's close enough. At some point in time, the EMA could start to pull price. Remember, the EMA works like a magnet. Now, I like the distance that it is away from there. I like that distance. I'm not too worried about that, but I am somewhat concerned with what I see on the 3. It's not far away from it. And what I see on the 1, it's not far away from it. And that could be, and look at what it looks like on the 1. The EMA is now controlling price. So again, as we say on the 3-minute, we see more of a general, view of the push. So we got some general strong downward movement. So we want to be careful. Even though it is in a slight uptrend, we have near past strong bearish movement. We look at it on the 5 to see what is the general movement in the near past. Strong bearish movement. Those are some strong candles. So we got to understand it. If we're going against that on the 1, we're going against some strong bearish movement. We're going against some strong bearish movement. So now, again, we go back to the smaller time frames, and now we're breaking down price into molecules, and we see that price was right on the EMA. So price was definitely being controlled by the 30-second EMA. And we saw, we had some strong downward movement, but now it could be pulling up, and it could be telling us that, hey, it's going to pull past this. It could possibly pull past this EMA back into that uptrend movement, or it could get stuck on the EMA for quite some time, or it could get stuck for a moment and it could continue to move downward, because this is some strong downward movement. So maybe we should be predicting or anticipating some strong downward movement. And this is why I say I don't want you guys to be so rigid. I want you guys to be anticipating that anything can happen in the market. So whatever could happen in the market, how do I anticipate getting a couple of clears off of it? Can I get some safe, confident clears off of it? Does probability say, hey, it makes sense to find some clears off of certain factors, certain variables that I put together, that I have pieced together? Let's look at the 15-minute and see what the 15 seconds, shall we say. What is the 15-second telling us? Price got pulled past the EMA. Remember, when we're looking at the smaller and smaller time frames, it's literally like just putting a microscope. Go back to the microscope video. We're just putting a microscope on the video, and we're looking at it from a microscopic view. We're breaking it down into smaller and smaller molecules, because we want to see, what is price doing? What is price doing? Okay, that was that hard pull down, and now we see every 15. We see, and these are 15-second candles. 15-second candles. We see what price is doing. So price is at some indecision right now. And now we break it down to the 10-second, and what do we see? Price move well past the EMA on the 10-second. It's looking like it could move into a downtrend. But, this is why we want to get used to looking at all 3 different time frames, and we want to be piecing it all together so that it makes sense for our minds. Let's go back to the 1 minute. What is the 1 minute telling us? Because that's what we trade off of. Or that's what I trade off of, if that's what you choose to trade off of. So that's just a broader view of what we saw in the 30-second and the 15-second, that downward movement. And a lot of what I'm seeing from those time frames is kind of indicating to me that price is going to keep pulling down, and it may just continue into downward movement. So I'm saying that, from my analysis, from my technical analysis, and from probabilities, and from my experience, and from what I've seen from these multiple time frames, when we looked on the big time frames, those big bearish candles, when we looked on the small time frame, price getting closer to the EMA and it pulling below the EMA, that we're going to be moving downward. And look what we see. Bearish movement moving downward. Bearish movement moving downward. So that's going to get my mind ready for it to say, hey, should I make, look, that big movement downward? Should I make a play on this, or should I stay away from this? See, that big bearish movement downward. But you have to just connect the dots. Remember, this is just a puzzle. Don't let this overwhelm you at all. Practice it. Practice seeing it in your demo. Practice putting the pieces and the variables together, and making it make sense for you. If you have any questions, you guys have the chats to ask us questions. Practice, practice, practice. Show examples, and in your examples on the Marco Polo, ask mentorship, ask the group chat. Hey, am I seeing this right? Am I explain it? And ask, are you explaining it right? And others, we will help you to see it in a better light so that, you know, it's not complicated. It's only complicated in the beginning, but understand, you guys are new to this. So it's just a step-by-step process. It was very complicated to me in the beginning. I wish I had a teacher like myself. And this is why I became the type of teacher that I am, to make things easier for you. So if you think it's hard for you, it was way rougher and tougher for me because I didn't have this type of guidance. I had to truly dedicate myself with a think tank to figure this out. But most of this I had to figure out on my own. But you're in a better position because you have me, you have mentorship, and we have resources and tools for you guys. So that pretty much wraps up this session, guys. Peace.